Well, ahead of tariff day, look at the weakness in the market. A gap down start, and it only got worse from there. It's over 300 points of fall that you're currently seeing on the Nifty alone. Let's see how the last lap of trading after coming out of a long weekend actually pans out. But yeah, that said, a lot of sectors are weighing heavy. There's real estate, there's technology, cap goods, FMCG, pharma. These are all indexes which are acutely under pressure, other than telecom, which is also led by those exaggerated moves in Vodafone Idea and banks to some degree, along with infrastructure names. You're not really seeing much of a move coming in. Under pressure then, Voltas. That's down about almost 6.5%. There's Naukri down 5%. The weakness on IT persists, so that's down about almost 5% or so. The ready reckoner rates in a state like Maharashtra have been upped, and that's definitely not auguring well for those realty plays which have a larger exposure to the state. Lodha, one such case in point, that stock is sharply down about almost 5%. Policy Bazaar as well, down about 4.5% or so. In fact, today financials are on the back foot. Look at Bajaj Finserv and Finance. Bajaj Finance right now is your top drag on the index, down over 3%. Technology, like I said, of course, is weak. Infosys, HCL Technologies, both down about 3%. Large caps like HDFC Bank down 3%. There's also Titan, which is lower. BEL, ICICI Bank has cracked 2%. Reliance is down 2%. So yeah, quite a bit of pressure, and surprising because that's not quite the same for the European markets for sure.
Absolutely, Aisha, because if you look at European markets, they are holding on to the positive territory. Actually, the rest of the Asian markets also today were trying to actually hold on to the positive territory just ahead of that big tariff announcement that will be offset by Trump, or that will be announced by US President Donald Trump. That's tomorrow, 3 p.m. Washington time is when he will be announcing at Rose Garden. It's going to be a huge event apparently. So all eyes on that particular development. For now, Europe holding on to a shade of green. But what about our markets? What should you be prepared for going ahead? We have Kunal Bothra along with Sandeep Sabharwal joining us on the show. Good afternoon, gentlemen. Thank you so much for joining us. And Sandeep, this is the penultimate day, a day before that we could get some announcement, a solid announcement on the reciprocal tariffs. How should one actually gauge this entire news event, and how should one actually position themselves, especially when it comes to the Indian markets?
I think hopefully this will be the liberation day from all the tariff talks, and markets will focus on fundamentals from there on. So I wouldn't be so worried. So I think India's external linkages are limited to in terms of our goods exports to the US are pretty limited. So I think there will be limited sectoral impact even if significant tariffs are put up. So I think the exact contours of everything we need to see. But there is unlikely to be any significant long-lasting impact of this news flow per se on Indian equities. Now, if the tariff was escalate, I think overall the risk assessment or risk in the overall markets goes up. So I think to that extent, the valuations which investors are willing to ascribe to risky assets like equities, that could come down. So I think that's a whole global risk which exists. But from the Indian perspective, the risk is limited.
Kunal, hi. What is your own take? Not just the weakness, but the way you sense dollars actually moving, because I think that's going to largely dictate which way flows do.
Yeah, absolutely, yes. And looking at so far the dollar index chart, it doesn't look very attractive as a chart. I think it's trading at 104 thereabouts, and we've seen the last 3 to 4 weeks, dollar index has fallen from 110 levels, but it still looks like that the index is looking out to be more on the weaker side, and we may probably drift lower, say closer to 102 or even 100 mark potentially. That could be a downside before we see any kind of a major bottom formation happening for the dollar index. And on the indices also, I think it's a natural reaction because of the way many of the global markets were panned out on Friday as well as on yesterday's trading session. I believe that once this news flow settles into, I think even if we come back to that 23,000 mark, which is the 50-day moving average, that would actually be a point where I would probably expect that the markets would become a lot more attractive yet again. So this 1800 point rally what we've seen, I think could get normalized once we dip closer to that 23,000 mark.
All right, that's about the market. Interestingly today, you have auto index that's under pressure, but two stocks actually saw a rebound from the day's lowest point. One of them is TVS Motor on back of better than expected numbers. Also, Ashok Leyland is the other one that actually saw a good uptick. Sandeep, what's your take on the auto pack? Because this is about the auto sales, but they're actually getting hit with what's likely to happen when you talk about the tariff front. Set aside that entire news flow, how should one actually play this theme, and should one play this theme at all?
I'm not sure how auto gets hit by the tariff theme because I think Indian exports of autos to the US are limited, and the potential of US exports to India of autos also remains limited. So I don't think it's a tariff story at all. I think a lot of panic was getting created by many analysts, etc., with regards to what numbers will come in from most of the auto companies in the month of March. Like you rightly said, the numbers which have come in till now, which include those of Eicher Motors, TVS, Ashok Leyland, and whichever companies have reported till now have been much above what the analysts were expecting. And autos tend to directly gain as the interest rate cycle moves down and liquidity improves. So I wouldn't be negative on autos. I think autos are reasonably well placed.
Vodafone Idea, let's talk about the star performer today in this kind of a weak market. And now that the government is going to convert that near about 37,000 crore dues into equity, that stock holding up quite well, even though it's come off a little bit from the top of the day. And other than that, of course, you know, there is Indus Towers as well. Their main client, Vodafone Idea, they've managed to now secure financial support. So that stock also in tow with Vodafone Idea. Indus Towers will just come up for you on your screens. That's also holding up very smartly in trade. In fact, I think it's up almost 6.25% right now. Sandeep, does Vodafone Idea still remain just a trade stock, or is it still an avoid for you?
Will remain a void because it will never make a profit. So if it never makes a profit, then the value for equity shareholders has to be zero.
Short and simple, it's a complete avoid on Vodafone Idea. Today, of course, what you're seeing is across the board weakness. IT once again getting hammered. In fact, IT has really been the one which has taken it on the chin ever since, the tariff talks intensified. But today, HDFC Bank has cracked 3%. There's Reliance, which is down, and then ICICI Bank as well. Sandeep, should the market fall further and maybe undo the rebound that we have seen since last month, would the buying list remain the same, or do you think there will be a new set of names that you would be looking at?
No, nothing much has changed. The companies which are doing well and they will do well. So I think many of the large banks also will get benefit, like Axis, ICICI, HDFC, all of them. Kotak will benefit as IndusInd slows down growth and tries to adjust its balance sheet. And there's nothing negative per se for these. So I think many of these banks are also foreign investor flow dependent in terms of short-term moves because the financials are the highest weighted in most indices. So I think foreign investor inflows and outflows tends to impact them in the short run. But longer run, they look good. L&T has been winning very significant orders, so I think that looks well placed. Some of the companies like M&M, Bharti Airtel, I think fundamentals remain strong. So I think a lot of large caps are reasonably valued and should do well.
So that's the take coming in on various large caps along with the banks. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we'll chart the markets for you. Don't go anywhere. Welcome back. You're watching Closing Trades right here on ET now. If you look at the markets, yes, near the day's lowest point, with the IT index being under immense pressure in trade today. And that brings me to the next question, Kunal. What's in store for the IT sector when you talk about the charts, and also which stock right now do you think that one should chance their arm with?
So, I think it's a bit tricky because frankly, I would believe that the Nifty IT index would try and consolidate over here for at least a few more weeks. What's actually been happening for the IT index is when you look at the last 1 month of performance, we made a base of 36,000 broadly for the IT index. We went up to almost 38,000, 37,800 for the index, and then now we are back again to the 36,000 odd mark, which means broadly this range of 2,000 points is acting as a a trading range for the IT index. The indicators have started to increase, however, the prices are going to a retest of the lows. And typically, when this happens, we expect the index to get into a time-wise consolidation. So there could be a mild drift on the downside for the IT index going forward, but I expect for the next say 3 to 4 weeks, or at least in the next 1 to 2 months, we may expect that the IT index could be a lot more range bound.
I want to bring up Oberoi Realty and Macrotech Developers, or Lodha, given the weakness in Lodha today. Now, this after Maharashtra has actually increased the ready reckoner rates, and the revised rates come into effect from today itself. Sandeep, what does it mean for the realty plays, and especially the likes of an Oberoi Realty or a Lodha, which have large dominance in the Maharashtra market?
I think the increase in ready reckoner rates is not so significant. I think it's in line with inflation. So I don't think that should be a big factor. I think the sector is correcting overall because there's an expectation that growth could slow down and pricing growth has already stalled. So I think that's what is possibly playing on the real estate stocks and could play out for the rest of the year also.
That's the take coming in the real estate space. Let's take a look at some of the counters that are actually moving in trade today on back of news flow. One of them being a trend. That one is actually seeing a good up move on back of the store additions. The portfolio has crossed about 1,000 stores. So on back of that, you have Trent that is holding on to good gains. Apart from that, take a look at Karur Vysya Bank. They've come out with their actually updates for the quarter, with the deposits and advances also gaining. So that's the stock that need to watch out for. Also paper stocks. Let's take a look at some of the paper counters. Remember that you have the ITC and Aditya Birla real estate deal that has come about, where you have the ITC, that's actually acquired that pulp and paper business of Aditya Birla Real Estate, where now ABREL will now focus on their core segment, and that is the real estate. So let's take a look at some of the paper counters right now. You have the likes of Andhra Paper, you have Sheshashai Paper, all of them actually seeing a good up move in trade today. Also, you have Nomura, which is saying that the deal valuation of 3,500 crore rupees is higher than the estimates of about 2,000 crore rupees. And Kunal, a space that we don't talk about much actually, that is the pulp and the paper business. What's your take on this? Have you actually seen any of these counters in the charts?
Yeah, I have looked at many of these names: West Coast Paper, JK Paper, Shai Paper, etc. Many of these stocks, they've gone through a very high beta correction in the last 6 months. So on an average, we look out for 20-25% kind of a correction to these spaces. But then now in this phase, we've seen many of these stocks correcting more than 30 to 35%. And interestingly, even in this last 1 month of this bounce in the market, we've not seen any major rally or a pickup of price trends for these stocks. Yes, these stocks have stopped falling, the volumes have started to improve, but the price rally into these stocks have been very, very tepid as compared to the different kind of mid-cap names which you've seen the market rallying up more than 15 to 20% from their previous swing lows. So that indicates that maybe we could be in for more of a time-wise consolidation into the entire paper basket as such.
Okay, just looking at the texture of the market right now, while of course the pressure on the markets continues, and it seems like it's a very India-specific move after a long weekend that we're stepping back into trade, because Europe is holding out quite okay. I want to just check in on what the US futures as well are, and they're flat right now. You're not really seeing any exaggerated moves. Europe, of course, is on a tear actually. 1.5% kind of moves to 1%. Pretty much across the board. The DAX is right now sitting on a 300-point gain, FTSE higher by nearly 1%, and similar is the movement on CAC as well. And even Asia, like we were earlier flagging off, that's managed to close in marginally higher for Shanghai, for Hong Kong. Japan is closed in flat. It's our market standalone that's, I guess, reacting to Friday's weakness in the US equities. Who knows what. But other than that, of course, there's Persistent, there's Naukri, Policy Bazaar, Voltas, all these stocks are taking a beating. Sandeep, IT still remains an avoid, or do you think one can bottom fish now?
Largely a avoid, because of the fact that if the US economy slows down, which it should, then the entire discretionary spending uptick story also gets moderated. We all of us know the news flow of how AI is taking over some low-level coding, etc. So I think the business model is under some threat. The good part is that these companies still have significant cash flow generation. They still do buybacks, etc. But then at some stage, the correction will end. So I think let's wait and see the commentary post results, which will, so most of the companies will report in 2 weeks from now, and we'll have more clarity. But I think definitely the pickup which had just started should again start moderating.
So that's the take coming in on the IT sector per se, given the fact that that one is actually losing quite a bit. You have a lot of brokerages come out with the preview of Q4 preview as well for IT, and they're not looking too enthused or too kicked about the quarter gone by for the IT sector as a whole. Kunal, let me come to you and let me get your view actually on the metal space, given the fact that of late we did see that bounce back in the metal sector. A lot of people were pinning hopes that maybe things will turn for the better, Chinese economy doing well, and also the way how the dollar index was performing. What's your take on metal sector in the charts?
Yeah, I'll be bullish on the metal sector overall at current levels also. I think JSW Steel has been doing fantastically well. I think even today, for example, the stock was perched at a fresh lifetime high or very close to that. I think by a margin of 0.5% or 1% is where the stock is off from its lifetime high levels. Compare that with a strong comeback which you've seen in SAIL Steel Authority. That's a stock which I think has formed a good base at sub 110 mark, closer to 110 or range for SAIL. Tata Steel has been one of the strong performers. I think the stock has made a very good comeback, 20% up from its previous swing lows of 120, 125 thereabouts. I think even at current levels of 150 plus, the stock still looks quite strong, consolidating at the 200 moving average. So when we look at the entire space on a relative strength basis, as well as on an individual basis within the entire sector, there are many stocks which have made a strong comeback. There are many of the stocks which are holding up their higher levels. They're consolidating at a higher point. And when we see these kind of patterns, that when stocks rise up higher and they consolidate and they don't give up their gains quite easily, even with a high beta sector like metals, that's strong indication that we are in for much more decent upside over the near to medium term. So bullish on the entire metal space and specifically the likes of JSW Steel, Tata Steel, as well as SAIL.
I want to see what Avenue Supermarts is up to today. The company has opened 10 new stores and their total, store count stands at about almost 412 stores now. Avenue Supermarts, not SAIL. That stock will just come up for you on your screens. Sandeep, just wanted to get your take in on Avenue versus, the QCOM space. Zomato, for instance, and this amidst reports that one is getting that they've let go of 600 employees from their customer support team amid the slowdown that they are seeing in food delivery. How would you stack up traditional retail versus QCOM?
So traditional retail has many companies. So I think on one side, your companies would fall into like V-Mart or companies like Aditya Birla Retail and Fashion, Trend, etc. in different segments. Avenue Supermarts versus the quick commerce, actually, there's no comparison per se because Avenue Supermarts is profit making. Those guys are still making losses and will increase the losses. But Avenue Supermarts standalone, a stock still trades at 80 times earnings. Earning growth should average 8 to 10% over the next few years. I think it's very, very highly valued. I don't think it should trade at such valuations.
On that note, we'll let you go. Good to have you on the show as always. Sandeep doesn't believe that it's fair value and finds Avenue Supermart expensive still. But Kunal, your reading is that the charts should hold up, right?
Yeah, the charts should hold up. In fact, we've seen almost like a 15% rally from Avenue Supermart from 3,400 to almost 4,200 levels thereabout. So I think even after this 0.5%, 1% dip, still looks attractive.
Okay, let's move on and let's talk about the star performer today. Vodafone Idea, as the government has decided to convert its outstanding spectrum auction dues into equity shares into Vodafone Idea. In fact, we charted the timeline of how the stock has been from its pre-merger days up until now. Anshul is here to walk us through.
So let's start from top. In 1992, Hutchinson Max Telecom entered in Indian market with those Hutch SIM card. And 2 years later, we are seeing that Aditya Birla has actually founded the Idea Cellular in 1995, giving competition to Hutch. After being in operation in 2007, Vodafone actually acquired Hutchinson SR for around $11.1 billion, and in the same year, Idea also went public. So after being in operation for more than 10 years, we are seeing that in 2016, Jio entered the telecom market, disrupting the entire market with its offers of free calling or free SIM cards. We are seeing that there was a huge, strong competition in the market, and at that time, Idea share fell from 120 rupees directly to 50 rupees. On the back of which we are seeing in Jan 2017, Vodafone and Idea announced merger talks, and at that time, the share price was around 45 rupees. And in March 2017, they actually proposed merger of around $23 billion. And on the back of which we are seeing there was a good increase in share price from 45 rupees directly to 75 rupees. But due to Jio's strong competition, Vodafone Idea actually registered net loss in FY17, and at that time the price went down to around 50 rupees. And after that we are seeing in August 2018 the merger was completed, forming Vodafone Idea, and at that time the share price fell even lower from 50 rupees directly to around 31 rupees. Now if we talk about post-merger, then in FY 2018 this loss continued to increase, and at that time debt crossed around more than 1 trillion rupees, and at that time share price fell even lower to around 20 rupees. And we are seeing that after that in Feb 2020, Supreme Court actually ordered AGR dues payment of around 53,000 to Vodafone Idea, and share price kept falling from 20 rupees this time to directly single digit 5 rupees. Whereas in March 2022, government takes 33% stake by converting 16,000 debt to equity, and at that time share price gave a good jump from 5 rupees directly to 15 rupees. Now currently in March 2025, Vodafone Idea has launched its 5G services in Mumbai, which is positive for the stock. And on 30th March, we are seeing that Ministry of Communication has announced to convert outstanding spectrum auction of around 36,960 crore dues into equity share. And with this, the government stake will increase from 22.6% directly to 48.99%. And with this, the net debt is expected to reduce from 2.1 trillion directly to 1.7 trillion rupees. Now with this, Vodafone Idea continues to navigate financial challenges while aiming for a stable future.
For that, Ansh, for putting all of that into context. But let's move on and let's talk about real estate space, which is actually hit hard in today's trading session, especially most of these companies which have a huge exposure in the Maharashtra state. We have Mr. Niranjan Hiranandani, who is the founder and chairman of Hiranandani Group, joining us on the show to talk about the entire hike in the ready reckoner rate in the state of Maharashtra. And thank you so much, sir. Afternoon to you. Thanks so much for joining us in ET9. Firstly, after 2 years, you have the ready reckoner rates that have been hiked in the state of Maharashtra. If you could help us understand, how should one actually read through this, especially for Mumbai, where the hike has been much lower when you compare it to the state average?
I think it's wonderful that an exercise in detail has been conducted before the increase. And I think the variations itself indicates that an application of mind has been done. So I think that's the plus point as far as that is concerned. The city of Mumbai, we've always been saying, is extremely high pricing already. And that is why probably the increase in the city, Mumbai city, has been put to 3.2%. And overall, and an averaging, of course, has come to some less than 4%. This indicates that we were right, that the figures are actually quite high. And these are one of the causes of inflation, of pricing in real estate, which has happened over the period of years. So that's the challenge that we have faced. But we are very happy that at least some application of mind in detail was done before actually exercising this journey, where earlier flat increases of 5-10% were done. This time, I think an application of mind is far more detailed.
Right. Mr. Hiranandani, does this also mean that rates, or rather the hikes that have come in, would be acceptable, as most transactions were taking place at a higher market rate as it is?
No. You have to try and understand this. How do you cause inflation? You cause inflation because you increase the rates of the land which is available. You increase the rates of the stamp duty which is there. You increase the rates of the additional FSI cost that you buy from government or the municipal corporation. You're also increasing all these rates. If you're increasing the rates will ultimately go up. So that is it. Now you're talking about an aberration of certain higher priced properties which are there, which is different. But what about the majority of the people who want to buy a house? You and others who want to buy a house, those people are going to be faced with inflationary tendency which will take place in the market, and the prices of their houses will also go up over a period of time. So that is the challenge that we have been facing. The government has recognized this. That is the reason why that question mark as to why it was not 8% and higher, but it was actually less. According to me, they could have just done 1 or 2%.
Right, Mr. Hiranandani. So now I wanted to understand, if you could help us understand and gauge what will be the overall impact of this on demand, and especially in the state of Maharashtra, which all cities are likely to see the maximum impact?
I think the government's revenues will go up, one, because they're wanting that increase in to take place. So they want to do more collection in terms of various taxes, charges, development charges, additional FSI charges, and others which are being taken from the government. They want to have more collection. So that's the real objective of this entire exercise that is done. And that is what they say also. They're quite open about it, that we want to collect more taxes from the people. Now, the question is, do you want to create more affordable housing, or do we want to collect more taxes? I think a balance required to be done between the two. And I think over a period of time, if you remember, during COVID time, they had reduced the stamp duty and other charges by 50%. The collections, in fact, went up because more sales took place and the prices were slightly more affordable. 100% charges are being levied. So obviously the prices will continue to go up over a period of time.
Right.
From a cost perspective.
Sure. But Mr. Hiranandani, the point is that, Mumbai already has high prices. You think the market will be able to absorb this ready reckoner hike in premium as well as affordable segments?
My worry is affordable housing. You have prevented affordable housing from being constructed in the city and suburbs of Mumbai. And this is simply because the ready reckoner rate and the other charges of FSI and others are too high. And you cannot even sell the properties less than the ready reckoner rate. So because the income tax authorities will not permit you to do it, and they will charge you a penal tax both to the buyer and seller for the purposes of doing that. So I think in reality, the inflation in prices, especially for affordable housing, is counterproductive in the case of affordable housing, especially in places like city of Mumbai and others. This is a big challenge for the affordable housing segment. And I think I'm more concerned about it. I'm not so concerned about the rich and the famous.
All right, Mr. Hiranandani, we leave it there. Thank you so much for joining us on ET Now to talk about this hike that the Maharashtra government has undertaken, especially when you talk of the ready reckoner rates. Remember, the Mumbai rates, the hike is much lower than the average hike in the rest of the state. We also have Vinay Rajani joining us on the show. Good afternoon, Vinay. Thank you so much for joining us. And let me just keep it with real estate space. I did speak to Kunal about it, but I wanted to understand your view on the entire real estate space, because yes, this one did have a very good run over the last 4 to 5 years. Now it is seeing a correction, and the correction is just getting steeper by the month when you talk about the real estate space. How do you view this one, and any stock that you're liking?
Yeah, good afternoon. So real estate space, the primary trend has been bearish. It has been forming lower top, lower bottoms on weekly and monthly chart. So it is one of the sectors which underperformed, and between that we saw a nice pullback, and again the downtrend is resuming. But the bottom was formed, if we were to talk about the Nifty Realty Index, the bottom was formed around 800 odd levels. I am talking about the Nifty Realty Index. So that is a strong support. So no doubt from the higher level in last 4-5 sessions we have seen some correction, but I think 800 is a strong base for the index, and anytime soon we can see again a resumption of a recovery. So no doubt it has fallen in recent past in last 3-4 sessions, but there is a strong support around 800 in the Nifty Realty Index. I think that should hold, and we should see recovery from that level. So it might happen that 1 or 2% further correction could be there, but I don't see these recent lows to be broken on the downside. So 800 is a strong support, and I am expecting some sort of recovery after a couple of sessions or some sort of extension of the correction. Again, we can see recovery. So overall, at this point of time, I don't feel one should go short in the real estate stock.
Okay, hold on to that thought, Vinay. Lots more to talk about, but let's get in some closing strategies as well. Kunal, what's on your list?
So I'll go with BPCL as a buy. Interestingly, the stock which went out of the Nifty 50 basket, I think now starts to look a little bit more attractive in terms of the technical setup. And looking at the current chart structure as well as the movement in many of the other peer stocks, expecting the stock to move up higher by a swing of another 3 to 5%.
Okay, and Vinay, would you have any closing ideas?
Yeah, I would be recommending two recommendations from my side. NMDC, so overall metal sector has been performing very well. So NMDC, which has just surpassed the important moving average resistances and looking quite resilient on the chart. So NMDC can be bought around 70. Traders can keep a stop loss at 68, and 73 should be the short-term target. The second pick I would choose is from the PSU bank space, Bank of India. So Bank of India has been outperforming in the technical setup, and indicator oscillators that we have been tracking are showing strength in the counter. So Bank of India can be bought around 110. Stop loss can be kept at 107, and on the higher side we can expect a target of 150.
Those are some of the closing trades coming in from our experts. On that note, we'll slip into a break on this edition of Closing Trades. When we come back, we'll chart the last half hour of trading session. Don't go anywhere.
Closing trades right here in ET now. Still got half an hour of trade to go, and let's just revisit where the market is settling in at. It is a day of acute pain, and it almost feels like the India equity markets are singled out. Post the long weekend, you are pretty much reacting to the Friday handover from the rest of the globe. Still counting lower, we're still down over 300 points at the index level alone. It's a tad bit better for the broader markets, but that's also because of, singled out outperformers like an IDFC First, Idea or Indus Towers, etc. But Sudeep Bandyopadhyay as well is on the show with us. Sudeep, hi, good to have you on the show. What is this, a delayed reaction that one is seeing to Friday's US market weakness, or just lightening up ahead of the tariff day tomorrow?
Well, I think it's a combination of both, Aisha. Definitely that 2nd April tariff is looming large over everybody's, psychology and, reaction or action. Too much of uncertainty, and, there are so many statements coming out of US. It's very, very difficult to even try to, gauge what's going to happen. So everybody wants to go light into the event, and that's pretty much causing this sell-off. And it's a broad kind of sell-off. It's not that any stock specific or counter specific. Yes, there are some sectors which have gone down more than others, but by and large, sell-off is across the board.
Right, that's true. We're seeing actually a sell-off across the board. A very good afternoon to you, Sudeep. But are there any pockets that you think that could be safe haven at this point in time in this kind of declining volatile market?
I think if you're looking about a couple of days or a week, I don't think so, because uncertainty and volatility is too much. But if somebody is looking at long term, I think our views remain consistent. We like the power sector, so an NTPC, PFC, REC, the entire ecosystem of the power sector does look good to us from a long term point of view. We like Bharat Electronics and defense electronics plays. We do like some of the opportunities which we see in construction infrastructure, like in cement. We believe the demand is picked up. There is a lot of public spending happening, and cement should start seeing good days ahead. So yes, there are pockets. One should be extremely selective, but probably these dips are good opportunity for buying stocks for long term.
To buy stocks in the long term, and also quality good stock that would be the caveat, isn't it, Sudeep?
Absolutely.
Yes.
That's exactly how one should behave. There are so many good stocks which are correcting because of this general uncertainty which is prevailing. So somebody is trying to build a portfolio for long term. I think it's a great opportunity. It's not that they should put all the money to work today itself, but yes, they should start putting money instead of waiting any further. One doesn't know what's going to happen, how the global markets, Indian markets are going to react after the tariffs are announced. We will probably react on third morning, when the market opens on third morning here. So yes, uncertainty is there, but one should start putting money to work. A lot of large cap good companies are available. mid-cap good companies are available at attractive valuation. And if you compare these values with, let's say in September 24 valuations, they are definitely cheap comparatively and attractive now from a long-term portfolio point of view.
Power and real cement would be some of the counters or sectors that look attractive at this point in time, Vinay. So from the power space, are you liking any of the stocks which have actually made a comeback? Case in point being NTPC, a good comeback coming in for that counter also.
Yeah, so overall, along with the power, PSU space has also been showing strength. Some of the stocks from power stocks which are looking good to us is the NHPC, which is looking good. Torrent Power is one of the space, one of the stock which we like. In last series also, March series, we have seen a significant long build-up with the Torrent Power. So Torrent Power is one of the stocks which we like from the power space. Another stock which is looking good to us is the NHPC. So NHPC is looking good. NTPC, yes, NTPC is also holding well for last 4-5 sessions. It has been into a running correction, but there is a strong support of 200 days exponential average around 347. So a couple of percentage correction could be there, but overall power stocks are looking strong, and one of the strong stocks which we prefer is Torrent Power, followed by NHPC, and obviously, as you said, NTPC is one of the strong stocks in the power space.
Okay. Let's move on and let's talk about the auto sales as well. The market weakness, and we're not just focusing on that. And the numbers have come in for the month of March. Shrishti joins in with how those are stacking up. Shrishti?
Well, the key outlier within the March auto sales data is the tractor division, because look at the numbers for Escorts as well as M&M. Not just that the company have recorded a double-digit YOY growth, but look at the commentary as well, where both the companies are actually highlighting that after a good month, that is March 2025, they are expecting the sales momentum to continue. And the leader, of course, that is M&M, is highlighting that they expect in Q1 of FY26 that expected to be even better. And both the companies' numbers were actually above the street estimates. So tractor division is one of the key outliers, but other than that, within the two-wheeler space, we also have numbers from Eicher Motors Royal Enfield, which did fairly better versus the street estimates. The company did surpass that 1 lakh unit mark, and some of their newer offerings have been doing pretty well for themselves. And within the same segment, we also have TVS Motors as well, wherein the exports have done very well, and the numbers were actually above than what the street was penciling in. Now let's talk about the passenger vehicle segment, because here in M&M Automotive Division, as well as the numbers for Maruti Suzuki, they were actually in line to what the street was penciling in. But this is the segment to watch out for, because from this month itself, that's from April 2025, all of these companies have already announced their price hikes that will going to be applicable, and the impact on the demand will be the key monitorable, and that will be something that we will be watching out for. And lastly, from the commercial vehicle segment, a bit of a mixed bag. Why so? Because Ashok Leyland numbers were actually above than what the street was penciling in. Their MHCV segment did very well for themselves, while for Eicher Motors VECV, the numbers were actually in line. So what we can call it that, yes, of course, the tractor division did really well for themselves, but other than that, no other company has actually disappointed on the sales data. That is another key takeaway. Mostly all the numbers are either in line or the numbers are above than what the street was penciling in. Back to you.
It's quite a mixed bag so far. Of course, the below estimate numbers have been from Maruti and Volvo Eicher so far, in line for Escorts and M&M, the auto division. But the beat has come in from both Ashok Leyland, TVS Motors, and of course, Royal Enfield as well. But let's talk tariffs, and let's get you an ET Now exclusive. The stakeholders, it seems, were briefed last week on discussions related to US-India trade talks. Now, concerns related to the two nations were also discussed. What else was discussed during this 4 days talk that they had on trade? Sumita is here with more details on that. Sumita?
Well, we're given to understand that stakeholders were briefed last week on discussions that ensued between the United States side and Indian side so far as trade talks to negotiate a bilateral trade agreement is concerned. Sources say that India is concerned that other geographies should not benefit even if there is a tariff imposition, whether there is a tariff increase or decrease that happens. Remember, US is looking to get the trade imbalance fixed, and India has held the view that export and import between the United States and India is complementary, and to address the trade imbalance is something that the United States has been referring to. India could possibly look at buying more crude oil from the United States. India could also look at nuclear energy collaboration and cooperation with the United States. In fact, India is looking at complementarity in pharma with the United States as well. Now, India, if you remember, recently proposed abolishing the equalization levy as well. There were 4 days of talks between United States and Indian trade officials. They concluded last week, and both sides are looking at expanding the bilateral trade to reach $500 billion by 2030. Remember, this is a target that was set earlier this year during meetings that went on between Donald Trump and Prime Minister Modi. Meanwhile, Commerce Ministry released a statement on these trade talks, which concluded last week. They said the talks centered around shared objectives of promoting growth, ensuring fairness, national security and job creation. They also said that the meeting was to discuss the next steps towards a mutually beneficial bilateral trade agreement, to discuss to make sure that the first tranche of the BTA is finalized by fall of 2025. In fact, now it is that sectoral experts will be engaging under that BTA, and those negotiations will start in the coming few weeks.
We have some big things we're going to be announcing over the next 2 days, and you know very well, Peter, and I think it's going to be something that's going to bring a lot of wealth back to our country, tremendous wealth back to our country, actually. And other countries are understanding it because they've been ripping us for 50 years, longer. I think this is going to be an amazing, I call it a lot of different names, but it's really, in a sense, it's a rebirth of a country, because how we could have afforded to do what we did. We help everybody, and they don't help us. I really, the term I like best probably is the liberation of America. It's the liberation of this country, because it's incredible. Look, we have 36 trillion in debt for a reason, and that accumulates over a long period of time. So I think what you're going to be seeing over the next couple of days will be very inspiring to a lot of people.
Yes, so all eyes will be on April 2nd, 3 p.m. Washington time is when he will be announcing those reciprocal tariffs. It will be sectoral tariffs as well. He will be, US President Donald Trump will be actually going into details of what those reciprocal tariffs would be like. But let me move aside from that news, and Sudeep, let me get your view actually coming in on the telecom space. You have Vodafone Idea, which is the stock of the day, where you have the government that has now gone ahead and converted that outstanding spectrum dues into equity, by which now the government will be holding approximately 49% stake in Vodafone Idea. Do you think that this will actually change a lot for Vodafone Idea, by the way, how the things are going for the business of this particular company?
Like a band-aid. I mean, you have a problem and you put a band-aid on it. It pushes the problem to a later date. Definitely, it helps in the short term because the problem was very big, and government converting the debt into equity has definitely given them some relief. There's absolutely no doubt about it. But does it mean that Vodafone Idea is out of the danger and back in good health and things will be good from here on? The answer is definitely no. There is a long, long way to go. I think the operational challenges for Vodafone Idea is huge. They are losing customers continuously, and that needs to stop first before anything else can really be said about Vodafone Idea. And I've been maintaining this view for the last 1 year. Till the time they stop the bleeding of the customers, I think any amount of fundraising will not help. Now, of course, this conversion into equity does give them an opportunity to go and borrow money from banks, put some money in the capital expenditure, ensure that there's a 5G rollout in metros like Mumbai, which definitely does help. But the final objective has to be stopping the exodus of customers. Unless that happens, I think the future does look bleak. Long term also, unless Vodafone Idea can probably improve its earnings by about 50%, the question of them servicing the future liabilities also is going to be extremely difficult at this stage. So I am not sure what's going to happen to Vodafone Idea. This is a temporary relief, but long term, definitely I won't advise anybody to buy. Well, traders can keep buying and selling and enjoying the volatility there. if somebody has to play the Indian telecom sector, I think Bharti Airtel is the place to go to. I think it's this company, the cash flows are improving. The capex is major capex is behind them. Revenues are improving. Also, if somebody wants to be a little more aggressive, they can go and buy Reliance as well. It's got multiple other businesses, but they have a telecom business as well, and value unlocking at some point of time will happen. So I won't recommend a long-term investor to buy, Vodafone Idea at this stage.
Okay. Is Sudeep, the call same for Indus Towers?
Well, Indus Tower is good. I think definitely the government is very clear that they don't want to create a duopoly kind of a situation in the telecom space, and that is good news for Indus Tower. But the question is, the tower expansions will slow down going forward because 5G rollout for Airtel to a great extent is over. So I'm not sure of the pace of growth of revenue of Indus Tower in the near future. We'll have to see when 6G comes or other developments come into play. But as things stand today, it's a good buy, but not for a long term because I'm not sure about the long term of Indus Tower.
For sure, both those stocks are the high flyers. But Kunal, any BTST trades?
Yeah, I'll suggest a couple of buy calls. The first one is about Piramal Pharma, something which we discussed in the morning also. Looks attractive. I think at 222, 224 levels where it's trading right now. Would look out for targets in the range of 232. Stop loss could be kept at 218. And the second would be a buy on Maharashtra Seamless. This could be an interesting chart. The stock is forming a rounding bottom formation on the daily charts. Crossed about the 700 levels. Excellent volumes today for the stock. Would look out for targets in the range of 755. Stop loss at 700.
All right, so those are the BTST ideas coming in from our experts. We have the GST collection data that has just been released by the government, where the GST for the month of March is coming at around GST collection that's coming at around 1.96 lakh crore rupees, which is higher by about 6.8% on a month-on-month basis and 9.9% on a year-on-year basis. You have the central GST collections coming at around 38,100 crore rupees, and the state one is coming at around 49,900 crore rupees. So for now, if you look at the GST collection data, definitely seeing a good uptick on a year-on-year as well as on a month-on-month basis. Sudeep, let me come to you and get your view actually coming in on the IT space. We did speak to earlier to Sandeep Sabharwal also on the IT space. What's your take on this one? How should one actually gauge this entire sector, given the fact that at one point in time you thought things are going to get only better, given the fact that you had Trump administration, a change in regime in the United States, but from there on the entire outlook for the US economy has only deteriorated, where you have a lot of economists actually talking about recession now?
You're absolutely right. I think that's pretty much explains what's happening to IT. If US is getting into a recession or there is a a definite slowdown in US, obviously IT budgets will be cut. People will hold back spending. Maybe some even existing projects will be put on hold. Now, none of this is good news for Indian IT, which derives 50% plus income from North America, particularly US. Now, under these circumstances, it's pretty uncertain at this stage how things will settle down in US. And I think it's better to wait and watch rather than try and grab some of these IT stocks. Yes, they have corrected and they probably will correct further, but no need to rush into these stocks. Some of these companies, particularly the large cap IT companies, are fundamentally good companies. They are doing all the right things. But if US slows down, there is a recession, or there is a massive inflation in US, which is being suspected now, things cannot be good for Indian IT companies. So it's better to wait and watch.
Okay, avoid for now. That's the clear call coming in on IT. I just want to see what the likes of HAL as well as BEL are up to. These stocks have seen a decent rebound all through the month of March. And now HAL has signed contracts worth about 62,700 crores with the Defence Ministry for supply of 156 light combat helicopters. UBS, they maintained their buy rating on HAL with a revised target price now to 54.40 from the earlier 4,800 thereabouts. BEL, of course, has been the strongest of the lot, and it's good to see that L&T as well has been getting quite a few order inflows of late. Sudeep, how do you map the moves within the industrials pack, and what would you still like within that?
Definitely, L&T is a great buy at current levels. And look, all these corrections are giving a great opportunity to accumulate this quality stock. The recent order win from Qatar was a landmark order win. I mean, it's the biggest order win for them. And one has to remember that the margin profile of L&T is improving. All these international orders, if you see, it's about 10% plus margin, whereas the existing book had about 8% margin. So overall margin profile of L&T is changing and it's improving. This is good news definitely for L&T. And you mentioned that they started winning defense orders as well. Also, the subsidiaries are performing well. Of course, there are some question marks on the IT subsidiaries because of what's happening. And remember, LTI Mindtree has a significant chunk of their business coming from US. So there are some uncertainties on their IT subsidiary. But fundamentally, Larsen & Toubro core business is very, very strong. And I think at current level, definitely worth buy. You mentioned defense. I do like BEL, Bharat Electronics. It's a fantastic company. They're doing all the right things. Order book is fabulous. And, they cater to Air Force, Army, Navy, all three branches of armed forces. The export opportunity also is emerging. They have ventured into ancillary segments like metro electronics for metro rails. That's also a very promising segment. And performance has always been good. They've been beating market expectation quarter on quarter. So current level, definitely a good buy from a long-term perspective.
Right. So that's the take coming in on the defense space. This interesting comments coming in from Xi Jinping, Aisha, where he's saying that it is the right choice for China and India to be partners of mutual achievement and realize the dragon and elephant tango. He's also saying that two sides should view and handle China-India relations from strategic and long-term perspective. So some very interesting commentary coming in. Just a day before, we could have that tariff hit coming from the United States, and it is China's Xi Jinping actually giving that comment, that the fact that it's the right choice for China and India to be partners of mutual achievement and realize the dragon and elephant tango. Interesting comments coming in actually on that particular front. For now, if you look at the markets, we are shutting shop near the day's lowest point when you talk about the Nifty. Below that 23,200 mark, when you talk about the benchmark indices, is a broader markets also that participated in today's fall. However, if you look at the advance decline ratio, the advances are much better and healthier when you compare it to the declines, with the Nifty Bank actually shutting lower by about 1.5%. IT index, realty index, these are the two major indices that have actually been hit hard in trade today, with the realty index actually reacting to that Maharashtra ready reckoner rates being hiked. So you have realty index down about 3%. You have the IT index that's under pressure on the fact that yes, Trump tariff threats and what impact it will have on the US economy doesn't bode well for the Indian IT sector. Talking about some of the outliers in trade today, definitely it has to be Vodafone Idea. That one shutting higher in excess of about 15%, while we speak 20% actually Vodafone Idea. You have Bharti Airtel also holding on to good gains. Indus Towers, 5% uptick coming in for Indus Towers, given the fact that if things go better for Vodafone Idea, Indus Towers will at least get its dues. Trent is the other one that was seeing a good up move in trade today on back of the fact that their portfolio has reached that 1,000 stores mark. So you have Trent that is holding on to good gains of about 5%. Apart from that, some of the individual counters that are actually trading lower in trade today, it's HCL Tech, BEL, Bajaj Finserv, HDFC Bank as well as Bajaj Finance. While on the flip side, IndusInd Bank today shining bright in trade, 5% uptick coming in for IndusInd Bank. You have Jio Financial also holding on to good gains of about 1.5%. Take a look at some of the auto names, given the fact that you had the auto sales data today. You have TVS Motors that reversed from the day's lowest point to end in the positive territory. You also have Ashok Leyland that has also seen a positive move. But as of now, if you see, yes, Trump tariff threats having an impact on the Indian markets, shutting lower by about 1.5% in trade today. Come tomorrow, hopefully we'll have a better day and less of a volatility. But remember, tomorrow 3 p.m. Washington time is when Trump will announce those tariffs. But on that note, we're totally out of time on this edition of Closing Trades. Thank you so much for watching.